I'm going to print money and make it okay for you. Don't worry. That's what the political answer is to Trump's tariffs, I believe. And therefore, by the end of the year, we're going to be swimming in fiat liquidity. And Bitcoin at 250,000. We might even be higher if we get the sort of gusher of liquidity out of the major trading blocks that I expect.
New all-time high by the end of the year?
Oh, for Bitcoin, I think absolutely will be at new all-time highs.
When we're into the third and fourth quarter, we're going to have the United States, China, Japan, and the EU all printing money, all providing financial accommodation because, they need to safeguard the value of their government bonds. They need to make good on the promises to their electorate, and the government needs to get funded at an affordable price. You have sort of this reorganization of the global finance and trade ecosystem initiated by Trump, but now everyone else has to react.
Today we have Arthur Hayes giving us his Bitcoin price prediction for 2025 and what we can expect in the crypto and capital markets in the months ahead. He recently shared his take on the current economic uncertainty. With tariffs and recession fears creating market volatility, Hayes suggests that a major market rally is on the horizon. And this is massive for Bitcoin. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price currently sits just over 85,200, still up over 30% in the past year. Hayes points out that markets have historically bottomed before major events resolve, so we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out. Let's get right into the latest interview with Arthur Hayes, as he gives his Bitcoin price prediction and where the market and crypto are headed in 2025. Drop your comments down below and subscribe if you enjoy the content we do here.
Now, Powell is in the same sort of situation here, right? What he should be doing is tightening monetary supply. The US economy is growing very well. Stocks are down 10%, 15%, whatever, but they're at all-time highs. Record wealth for those who own financial assets. Unemployment's at 4% record all-time lows. Why is he reducing the pace of quantitative tightening? Why did he cut rates in September and December of last year? He didn't need to. The U.S. economy is perfectly fine. Real GDP growth is growing above trend. Point is, as the Federal Reserve Chairman, yes, supposedly you're this, steward of the American dollar, keep inflation low, unemployment low, those sorts of things. But in reality, you're another arm of the government. And therefore, you will do what is needed as the Federal Reserve Chairman to make sure that happens. And I pointed out a very seminal speech by former Fed chairperson Arthur Burns from 1979 that he gave in Yugoslavia called The Anguish of Central Banking. And if you read that speech and you think about the issues that people are concerned about today within America and the world economy, you'd say, wow, it looks kind of like the same thing. And his point essentially was that the politicians and the government and the populace have adopted this stance that the government can solve all your problems. The only way government solves problems is spending money. And therefore, you embed an inflationary impulse into the bedrock of democratic society like America. And therefore, as a Federal Reserve Chairman, while you might believe that you should be squelching inflation or tightening the monetary conditions sufficiently to eradicate inflation, what you really need to do is make sure that the people get the policies that they voted for, which is inflation, essentially, if you want the government to have all these sorts of programs. And back in the 70s, it was New Deal era, grand society type things. Today, it's woke, inclusion, DEI, all those sorts of stuff, right? Same thing, different nomenclature. Arthur Burns is saying, yes, I was a Fed chairperson. At any point, I could have stopped inflation, but I couldn't because my job really was to make sure that the government was funded. But he did it because there's a $36 trillion pile of debt that's growing exponentially. The interest cost on that debt is growing exponentially. And the main inelastic buyers, China, Japan, Germany, these exporters that Trump has basically said, take your things and go home or build your factory in America. Therefore, you don't earn any more dollars. Therefore, you can't buy any more treasuries. Then if they're not buying, then the Fed or the banks have to buy. My base case is tariffs, inflationary impact is transitory. The fact that he even used that word is hilarious. He got so torched the last time he used that in 2022 when inflation spiked in a transitory manner to 40-year highs. However, that just tells you that his bias is easing. His bias is let's provide money to the treasury market so that Besson and Trump, whoever is in charge, can do the policy that they want to do. And I know people think that Trump is trying to sort of, do austerity, but his plan is from a 7% deficit to a 3% deficit. His plan is not to go to a surplus. His plan is not to, on a net basis, retire Treasury debt. He's going to inflate it away by growing nominal GDP growth faster than the rate at the deficit. Yes. So I think, again, money is being printed. It will be printed. Powell told you it's going to be printed at the last press conference. He says tariffs are transitory. I know Bitcoin has done pretty poorly alongside the NASDAQ and the S&P and a lot of other global stock indices. But I think that's just, investors not really appreciating that this is a fiat liquidity bonanza that's about to happen. I think Bitcoin will decouple from these and stock indices and trade alongside gold and really reflate higher as the money supply globally goes higher.
You said if I had to place a bet on whether I thought Bitcoin would hit 76,500 or 110,000 first, I would bet on the latter. So how are you coming up with these numbers? And I know you wrote that before Liberation Day. So do you still hold that opinion?
Yes, I still hold that opinion. So 76,500, that's the low that we reached in March. The local low after we broke through 70,000 in November of last year. 110,000, that's the new all-time high that we reached on January 20th, right as Trump was being inaugurated. And so I think that we take out that next all-time high and Bitcoin continues to do very, very well.
Hayes says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Hayes has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
And so Powell, he said his piece, he tried to be Paul Volcker or, the modern day equivalent. But in reality, he's just another government hack and he needs to print the money. And he basically said that at his last press conference, I'm reducing QT. Why reducing QT? Economy is fine. I might do QE for treasuries, let the mortgage-backed securities run off, take the proceeds, buy treasuries. And then he stated that when asked, the stock market, who knows, right? I don't really do stonks. It's hard. Company earnings, evaluations, and all that kind of stuff, right? All I focus on is global liquidity. I know that Bitcoin performs very, very well in a deflationary bust, which is what could happen in this situation, and that the monetary authorities in the United States and the rest of the world will provide financial accommodation to make sure the governments get funded. So I think anytime a government holds something, they can sell it. So everyone always freaks out about XYZ government holds so much Bitcoin. Are they going to sell it? They're not going to sell it. They're going to market order, dump it. Are they going to do, how are they going to do these things? So if people support governments globally amassing these stockpiles of Bitcoin, when the politics change, and the politics always change, can't really predict these things. Then from euphoria, we're going to switch to fear of what's going to happen. When are they going to dump these things? So why, if we know this is going to happen, why are we advocating for this policy?
I know you're not a fan of the strategic Bitcoin reserve. Why not?
It's not that I don't like it. It's more, I think people are unrealistic. What people think in their minds is, the government's going to issue some bonds, print some money, and then they're going to go and they're going to buy crypto and put it on their balance sheet, because most of the major governments in the world are deficit countries, or the largest ones in the United States that people are always looking at. It's a deficit country. They have to print something to buy Bitcoin. It's not like they have a bunch of savings that they're going to buy Bitcoin. But even still, even if you have a bunch of savings, there's lots of people in your country that are probably poor, or there's some societal problems that you could be fixing. And what you're saying is, no, we're not going to do that. We're going to buy some Bitcoin and some crypto. Now, of course, I love Bitcoin, I love crypto, but I just don't see the political optics of that being very palatable to a lot of people. So, there's a bunch of crypto bros going to get rich because you bought their bags, and you've got, the poor person over here suffering, and that money could have gone to some sort of enhanced government program. I just don't think that's very smart politics. And at the end of the day, I think people are being a bit delusional as to what's going to happen. Yes, maybe if a government had already seized Bitcoin, like the United States has 200,000 Bitcoin that they seized from other people, and they say they're not going to sell it, while Trump was in office, or the Republicans, or whatever. Fine, I get that. But notice what Trump said in a budget neutral fashion. So he isn't even going to print money and basically buy Bitcoin. So I'm not sure what people are really getting all excited about. I think people need to think a little bit more about, if you were a politician, was this what you really would do if you had the money printer, or if you had a pile of savings to do something with? Trump and Besson and his cabinet need to reduce the value of the dollar globally. They need to value massively. And I think they will at some point. And you can do it versus gold, or I think you can do it versus Bitcoin. You could do it versus both. But at the end of the day, I think if they're going to be revamping the global trade system, then the U.S. Treasury is not going to be the reserve asset anymore. It's going to be gold. I would love to be Bitcoin, but most likely it'll be gold. And at that point, you essentially need to devalue the stock of treasuries versus the new neutral reserve asset. And so I propose a scheme by which you could essentially bid up the price of Bitcoin in dollars by saying, I'm going to issue fiat bonds and buy Bitcoin for people at very, very high prices, and devalue the stock of treasury debt, and sort of create a new global trading architecture centered around imbalances being settled in Bitcoin.
Arthur Hayes challenges conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Hayes also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Arthur Hayes? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?